Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner.
Hi, everyone.
And Cheri and I are both with Client First Capital. And Cheri, the topic we have today is a great topic, but this is really your topic. And it's your topic because you have a passion and your practice is really about making sure that women are set up to succeed financially
hmm
and succeed financially in retirement.
Right.
And so, today's topic is the widow's penalty. And basically, it's what every widow needs to know about taxes and retirement. And so, although widows and widowers can be men or women, right? And
hmm
the penalty applies to both equally. But this is really something where you spend a fair amount of time helping your clients understand this and prepare for it.
Absolutely.
So I'm going to rely on you heavily as we go through this conversation.
Uh-huh.
But would you start us off with just defining what is the widow's penalty?
Sure. So the widow's penalty is essentially the increase in taxes that a surviving spouse faces when they transition from the married filing jointly to single status. Now, one thing to keep in mind here is that in the year where your spouse passes, you would file as married filing jointly in that year. And then following that year, you actually have 2 years where your filing status will be a qualifying widow. And your tax brackets and your standard deduction are the same as married filing jointly. So it's a critical period of time in which for you to act in certain kinds of strategies, such as Roth conversions. The reason why this happens is that oftentimes your income stays fairly similar. You continue to get your Social Security. Sometimes there might be a loss of the spouses, but you oftentimes continue to get pensions that were coming in, as well as you have the income that's coming in from your investments. So where you have the similar level of income, once you hit that single tax status, unfortunately, the tax brackets get lower. So you find yourself facing a higher tax rate. And then the standard deduction for the single filer is also considerably less than a married filing jointly. So that's what they call the double whammy, right? That
Yeah.
you lose your filing status and the brackets really shrink.
Yeah, so good point. So your income might stay the same. We're very close,
hmm
but your tax situation changes dramatically because you're no longer married filing jointly. You're filing single, and
hmm
so those brackets, right,
Right.
are a lot tighter. And then your deductions, right? So okay, all right.
Mhm.
So what are some of the ways that a person can plan for these or adjust for these and be successful or minimize the impact?
Absolutely. So one critical thing is managing Roth conversions before that second spouse dies, right? So for your years while you're still married and you have that best married filing single status, you want to be doing Roth conversions if you have an IRA that has a high balance. What that's going to do in retirement is generate very large RMDs, possibly bumping you into higher tax brackets. So managing those large IRAs during life is very important. And then once that spouse has passed, as I mentioned, in that first year, you get to maintain the married filing jointly status, and then you have the qualifying widower for the subsequent 2 years. So in those 3 years, you really want to look to maximize your Roth conversion opportunities if you're facing any large IRAs.
Okay.
The other way is through strategic withdrawals, ensuring that you're withdrawing tax efficiently and that you are withdrawing from the tax generating accounts first, and then your tax deferred, and then your Roth ones as well.
Okay. So Sri, what I'm hearing is like so many things when it comes to retirement planning, you can't wait till the event. You need to have a plan and then often start working years in advance. So a good example of that is you mentioned Roth conversions, right?
hmm hmm
So my wife and I both have a fair amount in our 401ks,
hmm
that's taxable,
Right.
and so a lot of people are in that situation. So if I and we don't know when either one of us is going to pass. And so the thing to be doing is working with a planner now and
Mhm.
having a strategy today to
Right,
start those conversions, right? And
right.
so, I stop there and just make this point of, if you don't have your hands around this and you're not working with a financial planner or an asset manager, or you don't have a financial planner retirement plan, right?
Mhm.
You need to be considering those things, and that include tax strategies, so that you can start this work today.
Right,
If you're eligible to start that work today, depending on your age and your situation.
right.
Um, but success really requires prior planning.
Mhm.
It's not something you can do in the moment and look backwards.
Right. And working with an advisor really helps you as well, because if you attempt to do the Roth conversions on your own, you can inadvertently end up bumping yourself into another tax bracket and increasing your taxes if you're not really sure how to strategically manage those amounts.
Yeah, that's right. There's a couple of different snags along the way
Right.
that could
Right.
end up defeating the benefit that you're looking to achieve.
Absolutely.
Okay.
Another tax strategy is when you do have those IRAs, especially if you are, sorry, RMDs, especially if you do have large ones, you can look at doing things like QCDs, or a qualified charitable distribution. What that is essentially using that RMD to contribute to a charity. If you have a church that you pay to, that you contribute to every Sunday anyhow, or perhaps you might contribute to an animal organization or an environmental agency, those types of things. If you already tend to be charitable, it's very beneficial to utilize those RMDs to make that charitable contribution directly out of that account, making that amount no longer taxable to you. So
Okay.
that's another really beneficial plan.
Yeah. So now you're touching on some charitable strategies, which again, those things typically work better if you're thinking ahead and
Right.
planning ahead, right?
Absolutely.
Um,
Right. And then the last kind of area for the tax strategies is really ensuring that you have your estate and beneficiary planning set up, making sure that you have trust, that you review your beneficiary designations, and ensure that you really have tax efficient asset transfers set up and in place.
okay, Cherie. So that's good. So the penalty is not necessarily avoidable,
No,
but it is. But you were able to minimize the impact by
right.
planning ahead, right? And having
Mhm.
the right strategies.
Yes.
Okay. Any other final thoughts on this topic?
Mostly it's just being aware ahead of time and taking these steps, while you still can. Oftentimes in those early years of retirement, when you first retired and your income has gone significantly down, those are good opportunities to take advantage of those Roth conversions before the RMDs kick in. That way you don't have that income coming in as well during that time.
Yeah. Okay. Very good. Cherie, as usual, you covered this topic really, really well.
Mhm.
And I know that this and other topics that impact women's financial security are always just top of mind for you. But I would say, if you're listening to this video and you don't have a retirement plan, you don't have a financial plan, you've not created tax strategies, I would say give us a call. Reach out to us. You can find us at clientfirstcap.com.
Mhm.
From there, you can schedule an appointment or learn more about our firm and what we do. Also, you can find links to videos like this to help educate you on various topics, and you can sign up for our monthly newsletter as well. So, Cherie, good job. This was a good topic today.
Thank you, Cary. Hope everybody got some value out of it.